Hello, everybody, and welcome to today's discussion about significant events occurring in property markets across Australia. I'm Terry Ryder, founder of Hotspotting, and today my special guest is the leading buyer's agent, Alex Dutt of Adviseable. We're having this discussion today at a time of positive change in real estate. Property data is increasingly positive as markets adapt to the new environment of higher interest rates, against the backdrop of a serious undersupply of properties. And at the same time, we now have that additional positive factor of a pause in the cycle of rising interest rates.
So I found this on the web for what time.
So what does it all mean?
Now that additional. Check it out.
Provide some answers. Our guest presenter today is Alex Dutt from the leading buyer's agency Adviseable. Alex, welcome.
Thanks, Terry.
We were just talking just a little bit earlier before we launched the webinar about how you're seeing I've just referred briefly to some of the positivity that's starting to emerge in markets, and you were talking about how it's actually reflected in your business as well as a buyer's agent.
Yeah, definitely. I will still say, though, that I get asked the question, no matter how the markets are going, that is now a good time to buy? So I thought I'd kind of cover off on that. And then the leading question after that is, okay, where do I buy? So they're the two big questions that I get asked more often than not, irrespective of how markets are actually going. So I thought I'd kind of work through that process and chat about that. So I do have some slides to go through. And let's get those.
Share your screen.
Can everyone see that?
I can see it.
Yep, great. So before I kind of get into the nitty gritty, just a quick disclaimer to say that this is general information, not personal information. And I thought as a starting point, just get a bit of an update on what's actually going out there with property prices, because, I mean, like we talk about sales activity, property prices, go hand in hand, really important indicator of where things might be going and what's happening in the marketplace at the moment. So I'm still getting, even though you're talking about, Terry, that there is a changing in attitudes, there is still some really conflicting information out there in the media. Stories about, we're still hearing about this fixed interest rate cliff, which I'll get into in a bit more detail, off the back of, on one hand, and then we've got, conversations and media stories about, houses in Sydney that are going way, way above, the at auction, against the reserve price. So we're getting some really conflicting information. And like we always talk about, I mean, the media, mainstream media is definitely not the place to go to for, news and as to what's actually happening in the marketplace, but it still, adds to the confusion.
Well, that's why we do webinars like this with people like you and me, because the objective of media isn't to inform consumers. It's not to provide them with useful information. It's to induce them to click on a headline. It's all about clickbait. And so you get sensationalist treatment of scraps of information. There's no coherent, in-depth analysis of what's going on in marketplaces. But when you sit down and look at all the data and sort the wheat from the chart, then you start to see there's a pattern emerging with more positivity emerging in various metrics.
Yeah, there is some really positive data coming out, and there's a real distinct pattern which I want to cover off on in the next slide, because to me it paints the perfect picture about where the opportunities actually are at the moment and where they will be for the next couple of years. Okay. The other thing, I know you've talked about this recently, quite a bit in your reports, and that is that prices are actually going up over for the last few months. So first part of 2023 actually has been quite positive, irrespective of what the media might be reporting. So we've had some price rises, and I know this is a direct quote from one of your reports, Terry, where we've got 500 towns and suburbs throughout the country that are actually where sales activity, which again is a leading indicator of price growth, is actually on the rise. So there is a lot of positivity in the marketplace.
Yeah. We've just recently analysed, as we do every quarter, sales activity for every significant town and suburb in the country. And I'd say about 42% as a figure across the nation of locations have strong to solid sales activity, likely to lead to rising or solid prices.
Which is actually pretty significant and quite amazing, considering that, I mean, given what I do for a living, people always come up to me, whether it's friends, family, whatever, and still want to talk about real estate, how are things in property land. And people still have a bit of a misconception out there that prices are really suppressed and the market's, not in a good shape, but it's not the case at all. So it's really interesting, that stat.
It's understandable they would have that impression because media keeps telling us that prices are everywhere, but the actual data, and it's coming through from various sources, whether it's Domain, PropTrack, CoreLogic, or SQM Research, or the Bureau of Statistics, that there are plenty of locations around Australia where prices haven't fallen during this period of rising interest rates. There's been many locations where prices have continued to rise, in fact, but we're not getting that message from media.
No, I mean, it's really interesting because people again will ask me how things are going, and I'll tell them an instance where we're trying to buy a house and we're one of 10 offers, and people are still amazed that, activity like that is still happening. So just kind of broadly speaking, just as a bit of an update, the upper end at the moment, and again, just a very broad kind of overview, but at the moment we're seeing kind of strong sales activity, resilient sales activity in the upper end of Sydney market, Newcastle, Wollongong, regional Vic, regional Queensland, Perth, Adelaide, and Hobart. So I'll drill into a bit more detail with some of these areas, but that gives a bit of a picture of where kind of the markets are really standing out. Some of the weaker markets, Melbourne, again, gross generalizations, but Melbourne, Brisbane, Gold Coast, ACT or Canberra, and some of the lifestyle markets such as the Central Coast, New South Wales, Byron Bay, Sunny Coast, etc. So, and obviously, like we've always spoken about, there are markets within markets. So this is not, all-encompassing blanket kind of comment as to what's happening within sales activity in these markets, but it does kind of paint a pretty rough, broad picture of where these markets currently sit. Any markets you wanted to add there, Terry, or?
No, I think that's quite a good summary, and it just emphasises the point that we get the simplistic analysis particularly from economists who tend to talk about Australia as if it's one market, and that the major overriding metric is what's happening with interest rates. If that was the case, then we would have the same market situation right across Australia everywhere, but we actually have many differences. As we wrote in our most recent edition of the Price Predictor Index, it's a very segmented market. We still have very strong markets in Australia. We have other markets which are just chugging along, and then there are those that are weak with declining sales activity. So we've got all those different scenarios playing out in different parts of Australia at the same time.
Yeah, and I think that what we're seeing at the coalface is a lot of separation in the marketplace, where you can see, 2021 felt like, almost everything in Australia went up in value. We're seeing amazing, we had, national property boom. I know we've spoken about that many times, but in the last few months, I feel like we're starting to see some real separation in terms of markets that are distinctly, like you said, kind of ticking along, not doing a whole lot, going sideways, and other markets that are really starting to pick up speed. And the next couple of slides will go through, why that's happening and how that's happened. So I think now this table is based on census data that came out in 2021. So the data is over 12 months old, but bear with me on this because it paints a real clear picture as to, how we ended up where we did. So if we look at here, this covers off on, what you talk about, Terry, and you referred to many times as the exodus to affordability. So this shows basically, and this is kind of a leading pre-COVID and obviously accelerated during COVID, but it shows a lot of the internal migration that happened leading into 2021. So basically, people leaving the capital cities, Sydney and Melbourne, and moving, hill change, tree change, sea change lifestyle seekers, and also seeking affordability. The cities, Melbourne and Sydney, were too expensive, so they thought, okay, we can work from home. Let's have a better lifestyle. Moving to, basically, whether it's interstate to Brisbane and the Sunshine Coast, whether it's regional towns, whether it's coastal towns, but it's it had a phenomenal impact on internal migration. And I know, again, humour me on this because I know we've spoken about it, in great detail, but it paints a really clear picture as to where prices ended up and what's going to happen in the next.
Yeah, I think it's a great graphic, Alex, because it illustrates a very important point. Media has been telling us another piece of misinformation that this exodus to affordable lifestyle, as we call it, was created by COVID lockdowns. And in actual fact, as the slide on the screen shows, it's the population drift, internal migration, moving away from the bigger cities to smaller cities or regional areas has been underway for a long time. It's been underway for 10 years or more. And it wasn't inspired by COVID. It may have accelerated during that period, but there's been a very important demographic shift, and it's been highly influential on what's happened with property markets in recent years.
It's huge. And I mean, I've got numerous friends that have moved into state, sadly. I literally just had a farewell party to a friend that moved to Perth. He's moving to Perth, moved to Perth on Monday, I should say. But, my father moved to regional New South Wales. A good friend moved to Sunshine Coast, another one to Brisbane. So I can count just anecdotally a whole bunch of people that have moved away from the capitals out of Melbourne and Sydney to, more affordable or lifestyle, areas that offer a better lifestyle. So it's, and it's just amazing the volume of people that, the changes. So basically, I mean, the winners out of all of this, I mean, it's pretty straightforward. You can see it's basically like a traffic light. The yellow, I will say, highlighted as a bit of a watch this space because they're a bit of an anomaly for the shorter term based on what happened then. But I'll come back to that in the next slide. But basically, Sydney and Melbourne, people moved away and moved, phenomenal, large amounts to regional Vic, to the coastal and regional pockets of New South Wales, and then particularly in Tasmania and the ACT as well.
Yeah. It's worth pointing out also, I think, that these are figures for internal migration. That's people moving from one part of Australia to another. The big compensating factor for the big cities like Sydney and Melbourne is that in normal times they get big population growth from overseas migration. Correct. That was turned off for a couple of years because of closed borders, but it's back on now again. And
absolutely. And it's interesting. And that's, I mean, you've hit the nail on the head, Terry, and that's why I've highlighted those areas in yellow, because Brisbane, Perth and Adelaide, so we work with migration agents, as I was telling you before, to help new Australians find homes. And some of the intel that we get is that the Adelaide, Perth and Brisbane are leading, the charge on where people want to move to. So obviously Sydney and Melbourne are always going to be very attractive, but these other three cities that I mentioned are becoming, really big draw cards, and that's going to change prices as well. So that's again, internal migration, really important stuff. To me, this slide is the $1 million slide, if I can say that. And what this shows, again, the data's from 2021, but it's been collated and released by the Australian government in the State of Nation Housing Report that came out literally last week. And what this shows is the ratio of dwelling price in the respective areas against first home buyer income for the respective area. And this is really, really critical because it shows affordability. So if we go back to the slide before, we understand where people are moving, how that impacted population. Now this shows the impact of median dwelling prices and affordability compared to first home buyer income. So they pretty much, the overlap is where the magic happens. Because, and compounded by a number of other factors, but to me, this really emphasizes where the opportunity lies. Because even though we've had populations, if we go back to the slide, I'll just go back to here. So this at the bottom where we talked about where the current sales activity is, at the bottom of this slide. This ties in perfectly with what's happening here, where we've had the change in values and the change in affordability. So if you look at, for example, New South Wales, again, this is a pretty broad brush because all the areas outside of New South Wales that don't include Sydney is a pretty vast area. It's a pretty large pool of dwellings in different spots, but it still does paint a pretty clear picture. And if we look at the coastal towns, some of the regional towns, lifestyle towns in New South Wales, have become radically unaffordable compared to where they were. So if you look at the 5 years between 2016 and 2021, we've had a 25% change in affordability. And that has had an impact on what we're seeing right now in sales activity. And in turn, over the coming years, likely, price growth. Whereas if we look at, so the ratio or the measurement is this, for example, rest of New South Wales is 5.7. So the ratio of income compared to price. The other one is the ACT. So we've had significant lack of affordability, and that's being reflected in sales activity. And then coming back to, for example, on the flip side, if we look at regional Victoria, so the rest of Victoria, we've had drastic changes in affordability, in terms of it being unaffordable, but people are still moving there. People still want to live there, and the relative affordability is still very much in favour of more price growth. So if we look at that ratio of 5.0, so I've highlighted the winners and losers, so to speak.
Yeah. Interesting to see the figures for Hobart and Tasmania. I was speaking on a forum last night and I was asked a question about what was happening with the Tasmanian markets. So well, they've been remarkable. They've been a national leader for 4 or 5 years on price growth, but they're well past their peak and are now starting to subside as markets. And the key reason for that I quoted was that Hobart used to be the cheapest capital city, but now it's far from that. It's now one of the more expensive ones. It's on a par with Brisbane with its pricing. So that relative affordability that drew so many people to move to Tasmania has been lost to a large degree because prices have risen so much, and it shows up rather graphically in these figures.
Yeah, and that's also spot on, and that's also reflected in the regional and coastal towns of New South Wales, where it was okay. I don't have to live in Sydney. I can work from home, work remotely, and I get a better lifestyle as well. And it's cheaper, so I can get much more for my money. It's not the case anymore, and that's why I've highlighted Melbourne and Sydney. And again, Melbourne and Sydney obviously very vast markets, 500 plus suburbs. So we're talking about a lot of micro markets as well. But the relative affordability of the neighbouring, in relation to Sydney, the neighbouring coastal areas and regional areas, it's losing its allure because your money is not going as far compared to the capital. So that's quite interesting. Sydney, I'm not discounting the fact that in a broad sense, Sydney is very unaffordable. But again, there are a lot of really good pockets within Sydney that are very affordable and have got really good opportunities to grow for other reasons. Okay. So one thing that I get asked a lot about and people seem to fixate on, pardon the pun, is interest rates. And I think that's giving a bit of a skewed view of what's actually going on and what's going to impact the market. So interest rates, broadly speaking, for me, it's a short-term influence on a long-term asset. And again, I touched on this earlier. We hear about what are we're going to have this cliff. So when people come off their fixed rates throughout the coming months, people talk about May being a bit of a benchmark through to September, October. We're going to have that having a significant impact on property prices. But what people don't also talk about is that the portion of the market that is going to be influenced or affected by mortgage stress is very small in the grand scheme of things. I mean, not discounting people that are in vulnerable positions, but a third of people own the home outright in Australia, a third of people rent, and a third of people have mortgages. So of that third that have mortgages, a very small portion of that are actually going to be in positions where they're going to be vulnerable to to mortgage stress. So I think the impact is totally overblown.
It's another media creation, isn't it, Alex?
Totally.
There's no doubt that there are a large number of people coming off fixed interest rates, but the notion of a cliff is very much a media creation. They've done it before.
Absolutely.
In years, in the past 10 years, there have been a number of periods in which media has made a lot of headlines about the impending cliff, and it's never happened in terms of the notion of a cliff suggests that people are going to fall over the edge and be lost, and that has not happened. We were supposed to have one during the COVID lockdown period. People adjust. There are solutions to the problem of people coming off lower fixed interest rates. Refinancing is one of them. And also the banks are aware that they need to accommodate people to avoid creating problems for themselves.
Well, I mean, the banks, well-being is totally underpinned by the residential housing market. It's the biggest asset class in Australia by far. It's pushing $10 trillion now. It's phenomenal. So the banks have a vested interest in keeping it afloat. And I know it comes with other issues that we won't get into because that's a presentation in itself. But I mean, touching on what you were saying, I've heard it before. We heard it before in 2017. We heard that with the Royal Commission, people where the banks were going to impose people having principal and interest loans as opposed to interest only for investment. We were going to see this again, a repayment cliff where there was going to be this influx of properties, people being forced to sell. And we actually saw the opposite happen in Sydney. We had a property boom. So it's interesting. And, you talked about this before, and that is that the reality is that, property price growth started to taper off towards the end of 2021, beginning of 2022, independent of interest rate rises. So, it is an influence, but it's not the be all and influence that people kind of seem to suggest. And I know, as you said, it's a media creation, the cliff and this fixation on interest rates. By the same token, it is an interesting one because, we're hammered over the head with it. And as investors, it's hard not to let it creep in and want to explore it and question it as to whether, it impacts, our investment choices. But I also think that it creates opportunities. So it does definitely impact the market. But the biggest opportunity that I see, and this doesn't get mentioned enough, and that is that interest rates rising put humongous pressure on development finance. So developers' ability to secure finance, which in turn chokes new housing supply. And that's exactly what's happening now at the moment. So, that's really important. But I think more importantly than interest rates, we should be focusing on what's happening in the rental market because that is amazing. Do you have any thoughts on that, Terry?
I've got a lot of thoughts on that, Alex. The key word for me for property investors right now is one word: shortage. And you just alluded to one part of that shortage equation, which is the shortage of dwellings being created. We're not building enough new dwellings in Australia, where we're falling well short of what we need to keep up with the demands of the community. But we've also got a shortage of listings of properties for sale. And I'm looking at a graph that was published by realestate.com.au recently, showing that compared to last year, there's been a massive fall off in the number of properties available for sale. So we've got three different serious shortages in Australia. We've obviously got the rental shortage, which media is belatedly highlighting. That's been an issue for a number of years, but media's really gone to town with this recently in terms of the consequences for tenants, with rents rising because of the incredible shortage of rental properties. But we also have a shortage of listings of properties for sale, and we've got a shortage of new dwellings being created. All of that adds up to opportunity for property investors right now.
Absolutely, because it directly pushes prices. It's as simple as that. So, the other thing that doesn't get talked about enough is that this idea of the RBA putting up interest rates or the banks passing it on is going to have a direct impact on rents as well. So, it's not interest rates again. It's a very important lever, but at the same time, it isn't the be all and end all. But it does still have an impact on prices pushing them upwards. But in terms of the rental shortage, vacancies at the moment, basically critical levels. So it's the lowest levels that we've seen, since records have been kept. And like you've said, there's no solutions. So the government doesn't have any. They've got a few, modest ideas, but no widespread solutions that's going to address it in full. And there's a huge number of households that are currently experiencing rental stress and having to make different decisions based on lack of available listings. So it's really significant. And we've had significant rent rises over the past months, past year or so. I'm constantly talking to clients, fellow investor clients, where they put rents up 50, 100. I've got heard one in Sydney put up the rent $200 a week. So rents are going up. I have friends who have had rental increases passed on because they're renters or rent investors. So it's happening. And it's some pretty significant rental increases. But again, as you're saying, Terry, it creates opportunity because the rental increase is creating better yields on investment. So what happens when rents go up? Why that's important is that the lack of option draws people, would-be tenants into the market to consider buying, and it draws investors into the market. So if you're chasing yields as well. And the other thing we've touched on is the increased migrant intake. And again, as I mentioned, we work with migration agents, and they're telling us that a number of migrants are deciding to basically skip the rental part of the cycle, because in a lot of cases, migrants move to Australia to do a short-term rental to figure out the lay of the land. They rent something for 12 months, maybe longer, find their feet, and then they look to buy. And migrants overwhelmingly buy the property. So that's another kind of phenomenon and stat that is really important to get your head around as well as an investor. But a lot of these guys are moving to Australia and deciding to skip the cycle and go straight to buying because of affordability.
And of course, we've got a massively increased migrant intake, not just the reopening of borders, but the intention of the federal government to lift the migrant intake without really considering where everyone's going to live at a time.
Absolutely. Huge. Yeah, it's huge, and it's putting a lot of pressure on the marketplace. It's absolute fundamental driver of where properties are going to property prices are going to end up. And the other thing to keep in mind is that the overwhelming majority of migrants coming into the country are skilled migrants. So largely white collar, basically right on the edge of the types of migrants going to purchase property. So that's really important as well. So I guess we've covered off on some of the broader things that are going to impact the market, but let's look at some of the other things that are going to push prices up over the coming months and year. Like you said, I mean, we are seeing, irrespective of the media, we are seeing a renewed kind of buyer sentiment. I know we've only had 1 month so far of rates being put on hold, but we still are seeing, inflation stagnating, so slowing down, I should say. The interest rate pause, as I mentioned, the continued tightening of rental markets, as we talked about, and also some other things such as the government putting a lot of money into first home buyer initiatives, and that's not just federal government, but also state government. So in New South Wales, for example, offering stamp duty as an annual payment as opposed to an upfront payment. So you're talking about from $30,000 to $50,000 in stamp duty saving, which is going to obviously create a big difference in buyers' ability to buy their first home. So these things collectively are really important, indicators of increased sentiment and sales activity. The other one, like you've touched on, Terry, is just a drastic undersupply of new dwellings. We've got that downward pressure because of increased interest rates, to development finance, but also, we've got an ongoing a pattern of building approvals trending downwards year on year. So we're expected to have a shortfall of new homes that are needed, 106,000 over the next 5 years. So, and this is really compounded by, the inflation of construction material and just finding the trades, finding staff. I have friends in the construction industry, and they're constantly lamenting about their inability to find people to help them find trades. Do you have anything to add there, Terry, about the undersupply of new dwellings?
No, I think it's just part of the equation of shortage. As I mentioned, 3 different types of shortage, and they're all putting upward pressure on rents and prices. That's why, in a period, a lot of economists are perplexed. Prices should not be rising, but they are at the moment, because they think that the only factor in play is interest rates. But much bigger factors are the supply and demand equation. We have an undersupply of properties being built, undersupply of properties available for sale, and undersupply of properties available for rent, and that's putting upward pressure on rents and prices. And those are the key factors, and all summed up in one key word: shortage.
Spot on. And as you touched on, the other one big kicker is the internal migration. So we obviously had a stop during COVID, but the government's pushing for, some people may or may not agree with it, but Labor pushed for an increase in migration numbers up to 235,000 per annum. Last year's net migration, so that is people moving in, but also short-term visa holders deciding to make Australia home. So the net migration, 304,000 for 2022, which is a lot of new Australians. And interestingly, there's currently around 1 million short-term visa holders within Australia. So, there's a huge amount of people that not just are coming to the country, but are already here and will likely, make Australia their long-term home. And we're already on track to match that for 2023. So for this year, we're going to match the net migration numbers for, phenomenal amount that we saw last year. So
the other element of the equation is the return of overseas students to Australia as well. That's another big factor impacting on rental markets.
Huge, huge. And like you said, there's no solution. The government has no solution as to where these migrants are going to go. Obviously, they figured out where there's a skills shortage, so we want to bring them over and help them with the economy, the overall economy. But the actual housing of these folks hasn't been given a solution. So that's again going to put significant pressure on the market. And like I talked about, from what we can tell, a lot of these new Australian migrants are moving to Brisbane, Adelaide, and Perth as being some of the significant destinations. Notwithstanding, Melbourne and Sydney will always be favourites, but it's interesting that we're seeing a bit of a change in, some of the old standbys. And we have a huge multi-billion-dollar infrastructure pipeline. With that's almost a presentation in itself. But for us, some of the real standouts are Sydney, Newcastle, Melbourne, Geelong, Brisbane, Adelaide. But there's a whole host of other areas where infrastructure, both federal and state infrastructure, government infrastructure spending is going to really provide a boost to those respective locations. Did you want to add anything, any kind of highlight reels of infrastructure at the moment, Terry, that you're real?
We just see it as so critical that we always have a big emphasis in our reports on new infrastructure spending, because we know that it generates economic activity and therefore jobs and therefore demand for real estate. And it's very clear that when we got into the COVID period, that state and federal governments, their plan to keep the economy strong was to pour a lot of money into new infrastructure. And so we've got this big infrastructure pipeline adding to what would normally be there, the COVID response. And so some of these are long-term projects, big projects like the Inland Rail Link, for example, which is, according to the latest estimates, it's a $30 billion project just currently under construction. So we've got these big projects happening, not just in the biggest cities, but also in many regional areas. And it's a huge generator of demand for real estate directly and indirectly. It's a big factor.
It's really interesting as well with infrastructure, because I feel that unless you're seeing it day to day, a lot of people don't really think about it, and it doesn't come into the forefront. I mean, a really good case in point for me is the second airport here in Sydney. It's not talked about enough. It's immense. You know, I've got friends that travel overseas all the time, and I talk to them and say, you know, this is going to be interesting whether we end up going to Badgerys Creek from where we live to go overseas. And, you know, they're kind of scratching their head going, why do we go to Badgerys Creek? And I'm going, the second airport. You know, it's news to them. It's amazing. And it's, you know, this is twice the size of Mascot, so the current airport in Sydney. It's humongous. But
And the biggest factor for me from real estate isn't the airport itself. It's the huge industrial commercial precinct that springs up around airports inevitably. All these businesses that want to be close to an international airport. It becomes one of the biggest jobs nodes in the city because people want to live close to where they're working. So you've got tens of thousands of people working in the commercial precinct around the new airport. That's going to bring a lot of demand for real estate in Western Sydney.
Yeah, 100%. And also the transport infrastructure to get to the airport as well. So the state government spent a lot of money on that as well with the metro. So the link from St Mary's, you know, down to the new airport. So that's going to have a massive impact on that whole western corridor from Penrith right down. So yeah, that's just a side note, but that's just one example. The submarines project as well, you know, is a big one for Adelaide, and that's why we've mentioned that there. So that's kind of big news as well. And you know, again, that $1 million slide that I put forward, hopefully I was able to emphasise or get that point across there. But that proposition, the change in affordability that has dried up in some areas, or decreased, I should say. The allure has decreased based on the fact that affordability has really waned in some of those areas based on the internal migration. But then at the same time, that internal migration is still leading into areas where there is some really good affordability, such as, you know, regional Victoria, for example, regional Queensland, Brisbane, for example, and others with the international migration we talked about before. But that's a really good indicator of where prices will go, and it's a direct reflection of where price or market activity is at the moment. So, and the other big one that I know you've talked about, Terry, before is the change in demographic and population and lifestyle choices within the capitals as well. So over the next 10 years, we're expecting, well, one of the strongest growing market segments is, you know, within the housing sector is the change to single occupant households. So, you know, this is really important because it influences the types of properties that people are buying, and in respect to affordability, that ties into location as well. So traditionally, it was larger homes, family homes, whereas there's a big trend, a big shift in lone households and people, you know, not needing big family homes as a byproduct, and being open to units and apartments. So, you know, that's a really key, you know, important consideration of where opportunities will lie. Do you have any thoughts on that, Terry?
I do, but I'm also mindful of time. I won't get sidetracked. We need to keep moving, I think. We're
Okay.
40 minutes into a 60-minute presentation.
No problem. Okay, so I mean, this basically kind of extrapolates the stats and shows, you know, where those opportunities, or where the kind of demand is for those homes over the coming years. So, you know, there will be an increased demand in those, again, medium density, low rise, higher density type of homes. So where does all of that leave us to in terms of opportunities? I've handpicked 3 areas that we can look at, you know, where that overlap is between where people are moving, both internal and, in this case, international migration, infrastructure, affordability, and a whole host of other things. But again, this is one of the opportunities. So City of Stirling in Perth, it's a very big LGA, so there's quite a few suburbs within. So we're going to get, you can see it neighbours Scarborough Beach, which is a bit of a draw card, tourist attraction in and of itself. So naturally, the homes along close to the coast are going to be probably a bit out of the reach for most of us investors. But further inland, there's still some really affordable suburbs, that offer great opportunity. And it's, some of these suburbs, if you're a local, you might consider them kind of ugly ducklings. They're kind of lower socioeconomic, but they are changing, and it's off the back of affordability.
Yeah, big fan of that area, Alex. We've just recently completed an analysis of the Perth market. We believe it's the strongest capital city market in the country right now. And the City of Stirling, we think, is the strongest precinct. One of the things I like about it, it's got a variety of price points. There are affordable suburbs like Westminster and Belga, where you can sort of buy in the 300,000 and 400,000s perhaps, and then you've got $1 million suburbs and everything in between, plus great infrastructure. So it's a really, really good market, not far from the centre of Perth.
Yeah, and very low vacancy, so the rental market is extremely tight. So depending on your suburb, I mean, the vacancy rates are, in some cases 0.1%. So that's literally 1 in every 1,000 property being vacant at any given time, which is virtually means there's nothing available on the market. And that's reflected in yields. I've been quite conservative with my yield estimates and also the price points as well. So as you said, Terry, I mean, you can buy properties for under 400,000 there. But generally speaking, I think that's a good number to think of, kind of under the 550 mark. But there's a lot going for it. It's great market.
Yeah.
The other second option is the City of Salisbury, and I know I've touched on Adelaide a lot. And if you've ever heard me before, you know that I like Adelaide, and it's there will be some recurring themes in these areas, and that is because these areas have performed very consistently. Less so much in the case of Perth. It's a bit of a new one kind of re-emerging on the scene, but Adelaide has performed really consistently and really well. So it's done quite well. Yeah, Terry, what do you think about Adelaide or Salisbury in particular?
Well, I think you know the answer to that question, Alex. I'm a big fan. Looking at it dispassionately as a real estate analyst, Adelaide, I think we've been blowing the trumpet about Adelaide for a number of years, and for a long time it felt like nobody was listening. But I think Australian has become aware of what Adelaide now offers, that it's now underpinned by a strong economy, that's got great relative affordability and a great lifestyle. There's a lot happening there, and it's become one of the growth markets of Australia. And I purchased there myself in the City of Salisbury most recently as a private investor, and I engaged the assistance of Adviseable to find the right property, which he did. And that's been an incredibly well-performing property, both in terms of the rental growth and the value growth. So I like that area. That northern Adelaide offers great affordability. There's lots of major employment nodes up in the north of Adelaide, always remembering that most people don't work in the CBD, contrary to popular myth. They do work in suburban jobs nodes, and there's some big ones up in the north of Adelaide. People can live close to where they work and buy affordable property up there with good transport links and all the other infrastructure that they need. So, yeah, good market.
Yeah, and it's our go-to for rock solid affordable option as well. And the yields, again, some of the strongest out of any capitals. Very low vacancy. So you can see, depending on suburb, but around that 0.1%. So what they're saying, virtually nothing on the market. And this is reflected when we buy a property for a client, they go to put the property on the market for rent, multiple applicants straight away, 10, 15 rental applicants, if not more. And so tenant ready to move in straight away after settlement, some really good returns. And it's a very family friendly area as well. So, you know, a lot of young families, first home buyers. So it's, you know, it's prime opportunity for investors. So that's that. And Toowoomba. So if you listen to my presentation I did last year, Toowoomba was on my list as well. And this comes back to, you know, my comment before about consistency. You know, a lot of our recommendations remain relatively the same. We do move them around, of course, based on what's happening in the broader marketplace at any given time. But, you know, Toowoomba is still going strong. It still very much is in that overlap that I talked about before, which is, you know, internal migration, so people moving to regional areas for jobs in particular, and affordability, and, you know, as I said, that it's still good buyers, so it still is relatively affordable in the grand scheme of things. So, you know, for under 600,000, even potentially under 550, you know, you can look at homes such as the one in the picture, and all these photos are of homes that are actually in these locations. I should point out they're not just random houses. But it gives you an idea of what your money will buy there. Yields are still kind of playing catch up a little bit with prices because we've had some pretty good price growth, but we've still got some, you know, significant lack of rental properties with low vacancy rates. I mean, anything under 1% is considered, you know, a dire situation. So you can see in the last 3 areas I've been talking about, you know, 0.3, 0.1, 0.7. That's, you know, really, really extreme situation with rental. And, you know, with the infrastructure pipeline, you know, we've got that inland rail link that you talked about. So I need to adjust that figure of 14.5 billion, do I, Terry?
Yeah, there's always a massive blow in the cost of infrastructure in this country. Started out as a $10 billion project, then 15, and now they're talking about 30 billion. But it's well under construction. That's the key thing. Huge sections of it have already been built, but ultimately it will connect Melbourne to Brisbane via Toowoomba as the major Queensland hub. So it's a huge transport hub being created in Toowoomba by the inland rail link right next to where the new Wellcome airport is. So it's one of the reasons why Toowoomba has become a very significant regional city. Lots of big businesses are setting up operations there for that reason. Yeah,
it's huge, and it's also got the kicker from the Surat Basin. So it's got a bit of a resource, you know, kicker from all those nearby towns: Dalby, Chinchilla, Roma, Miles, et cetera, et cetera. So, you know, it's a really interesting, you know, market there. That's pretty much the top 3 of my areas that I thought I'd raise. Are there any other areas that you think are standouts that people should be considering at the moment, Terry?
I don't think Australia's full of them, really. You've touched on Perth, you've touched on Adelaide. I think Darwin is an underrated market that doesn't really get talked about, but it's one of the stronger ones in the country at the moment. It has the highest rental yields of capital city Australia. Many other locations in regional Queensland are worthy of consideration. Gladstone, Mackay, Rockhampton, Townsville and others. But right throughout regional Australia, there are good possibilities. Not all of regional New South Wales has become unaffordable. There are some of the more, the smaller inland regional centres. I like Tamworth in particular in regional New South Wales, still very affordable and lots happening in its economy. So for examples like that are to be found, and I remain a fan of regional Victoria, always keeping in mind that some of the key centres of regional Victoria are going to be boosted by the 2026 Commonwealth Games, which is going to be hosted for the first time by a variety of regional centres rather than one big city. First time that's ever happened anywhere in the world. So Bendigo, Ballarat, Geelong, Latrobe Valley, Shepparton are all going to get a piece of that action. That's going to help their property markets.
Yeah, absolutely. What do you think about the sunny coast at the moment, your own backyard?
Yeah, look, it's been a wonderful market, but it's one of those markets, you touched on it with some of the expensive, iconic lifestyle markets in New South Wales. That's also happened in Queensland. So the Gold Coast and the Sunshine Coast have had fantastic growth, but they've passed their peaks. And right now, those markets are, generally speaking, in decline. But other parts of regional Queensland that we've touched on, like Toowoomba, are rising markets and offer much greater level of affordability. Do you have much more in the way of slide presentation? Just mindful.
No, that's it. I thought I'd just quickly cover off on who we are. I just thought I'd cover off on that now rather than kind of get bogged down up front. But basically, we're fully licensed buyers agents, so we can help you buy in all the areas that we've spoken about and others. We're fully fee for service. We're also QPIA, so Qualified Property Investment Advisors, and again, we're buying nationally. So give us a call if you want us to help you find an investment property. We'd love to help. And we also offer a discount. So if you've made it this far into the presentation, thank you very much for listening. And we'd like to offer a $500 discount off our service. So give us a call. There's my email address there. There's our website, so have a look at that. Have a look at our Google reviews as well. And yeah, I guess we can open up for any questions if anyone's got any questions, Terry.
Yeah, so just leave that slide on screen, Alex, so that people can follow up and contact you if they want to. We've got lots of questions in the Q&A panel. Edo is asking, you mentioned the affordability ratio, which is a ratio of median price to buyer income. Do you know what income figure is being used in that equation?
I don't, but it's for first home buyers. So I would, and it's pretty comprehensive study. That study is online. So that report, I should say, so the State of Housing report, it's online. It's a government document. It was launched last week. So if you Google State of Housing Report 2023, it'll come out. It's about 70 to 80 pages long from memory. There's heaps of really useful info in there. But the stats are around first home buyers. So my assumption is that it's reflected based, it's geographically based. So that's going to be different, to different areas, but I can't confirm that.
Question about, do you have any data where migrants are going or expected to grow? I think you actually touched on that with the figures that you presented. Some great slides depicting that information, but the question also asks, do you see an increase in migration to Adelaide? I think we're seeing that, aren't we?
Yeah, absolutely. Just anecdotally, as I was saying, we work with migration agents and they're saying, people want to move to Perth, Brisbane, Adelaide. They're always going to want to move to Melbourne and Sydney, but also, those other three capitals are where we're seeing a bit of a resurgence in migration, just in terms of, again, affordability. People seeing that affordability and better lifestyle.
And a great lifestyle. Sandeep's asking, what do you feel about Townsville compared to Toowoomba?
I do like Townsville. I feel like it doesn't quite have some of the bigger drivers of Toowoomba, given some of the infrastructure and like I said, just proximity to that rail link as well. So and the capital of Brisbane. So, but again, both are great options.
Yeah, no, we
find the right property within that is.
We're a big fan of Townsville also. The one thing that people need to keep in mind, because it's in that tropical north, insurance pretty much.
Absolutely. Your cyclone insurance is going to go up high, so you got to factor that in.
No, I was asking, considering that Adelaide and Toowoomba have had substantial growth in the past 2 or 3 years, do you still think there's a lot of room left for capital growth? I think both have still got, I think they're only partway through a cycle. How do you feel about that, Alex?
Yeah, it's a really good question. And that's why I wanted to, earlier in the piece, go on a bit of a journey about, what's happened over the last few years. And yes, we've had price growth, significant price growth. But, as I was saying, within that affordability, there's plenty left in the tank. So if you compare the rate of incomes, first home buyer incomes to median prices, and again, in the grand scheme of things, Australian property may look relatively unaffordable to the uninitiated, but when you start to drill down into the different areas, you can see that there's still plenty in the tank, in Brisbane, Adelaide, and Perth, and regional Victoria, and regional Queensland as standouts for affordability. And I think that there is, as I said, plenty in the tank.
Yes, I agree. Amit, with regards to property type, is referring to the data that you've presented in various areas. Is it specific to houses, or does it apply equally to attached dwellings like units and townhouses?
Predominantly, it is going to be houses, but we're seeing a bit of a shift. So, and that is going to change people's buying habits. I think as we see an increase in lone dwelling households, but predominantly first home buyers are going to be looking at freestanding homes. But again, it's case by case. So within, I always say that giving people ideas of where they can buy is one thing, but then the next part of the equation is knowing what to buy. And that's a really important question to answer as well. So within each of these areas, there's going to be nuances as to what type of dwelling works. And then if we say, for example, it's houses, well, is it 3-bedroom houses or 4-bedroom houses? And conversely, if it's units or townhouses, what's an acceptable and desirable.
I think that the property price data actually showed, and it's generalised, of course, but apartments have actually outperformed houses in the last 12 months in many locations in terms of the increase in median prices. We've seen that in various locations.
And sales activity. So as we kind of talked about within the first slide, there's an increase in sales activity in just the first few months of this year. Units versus houses.
I think so. We've seen that in our analysis too, and it's about both affordability and it's also about lifestyle, low maintenance, hopefully lifestyle. There's a question about property values for homes in the Moreton Bay region, the north of Brisbane, since the commencement of the interest rate period. We still have seen good price growth in those areas. The rate of growth has fallen off as it has in Brisbane generally, but we're still seeing increases in values there.
Yeah, we love Moreton Bay. Moreton Bay is amazing. So it's really good opportunity, I think, there. I mean, I think the buying conditions right now are much more appealing. A good litmus test for us is when real estate agents call us, not us having to stalk them. And right now we're getting, a lot more, listings from real estate agents in Moreton Bay. Just last week, we sent out an email, as we do, to touch base with our agent contacts out in Moreton Bay. We sent out, I think it was 150. We contacted 150 agents, might have been 200, but we got a pretty significant response in terms of listings. So that gives an idea of, the state of the market and what opportunities are out there. So ability to negotiate is improved, but it hasn't changed any of the long-term growth drivers of the area with Moreton Bay. So it's a great option.
Okay. And one of the viewers is saying, you're speaking about locations under 600 grand or 550 grand for smaller investors between, say, 400 and 450,000, any possibilities?
450, yeah, I think
between 400 and 450,000.
I will say that, I mean, 2 years ago, we would have had a whole bunch more, maybe 3 years ago. The average purchase was kind of 400 to 500,000. Now I'd say our average purchases for entry level is 500 to 600,000. But for 450, depending on whether you're open to a little bit of compromise, you can look at pockets of Adelaide. So parts of Northern Adelaide, so Playford Council, for example, which is just to the north of Salisbury Council, you could potentially find some properties, opportunities there in good spots. Yeah, that would probably be my pick for the cheapie.
Okay, but we've still got a lot of questions to get through, but we've really run out of time. What I would suggest is that anybody would like to follow up and speak to Alex or his colleagues at Adviseable, please make contact through the information that's currently on screen. If you've got comments, questions, or would like to take advantage of the services offered by Adviseable. Sorry that we didn't get through all the questions. We never do because we always get too many. But thank you, Alex, for an excellent presentation. There's some wonderful information in what you presented. I'd like to get a copy of your slides because there's some wonderful data sets there, particularly those on population movement that are really quite essential information and understanding the patterns in property markets in different parts of Australia in recent times and currently. So thank you for that presentation. We'll do it again soon. And again, I would urge anybody interested in investing, needing some advice or assistance to make contact with Alex and his colleagues at adviseable.com.au.
Thanks, Terry. Thanks, everyone, for listening.
Okay. We will be doing another webinar in 2 weeks' time at this time, and we'll be sending information out to everybody on our mailing list about that. But for now, Terry Ryder from Hotspotting signing off. Thank you, Alex Dutt from Adviseable. Bye for now.